Hi guys, welcome back to my YouTube channel. This week we're joined by Nick Dutton, property finance broker, and he's talking all about the BRR strategy and how you can get finance for it. Lots of fantastic tips for first timers, experienced developers, and also he's running through how to get 100% bridging finance, the products involved there, and how you can maximize your chances of success. Make sure you stick around and watch the full video because it was an action-packed interview with tons of valuable content. As always, please do hit the thumbs up button and make sure you're subscribed with the notifications turned on so you get notified as soon as we post brand new videos. So thank you very much for joining me today, Nick.
No problem, thank you for having me.
So for those that don't know you, kind of tell us a bit about what you do and kind of how you help property investors.
Okay, so my name's Nick, I'm from BRR Finance. We are whole of market commercial mortgage brokers. People get confused when I say commercial mortgage broker. We do residential, but if you're going to live in it, we don't fund it basically. So we work primarily with property investors.
Yeah.
Anyone from doing a buy-to-let, HMOs, service accommodation, we do bridging, development, anything to do with property investment, we will fund it. So we've helped customers buy their first buy-to-let property. Yeah. Where, you know, it might be their first property completely. We've helped customers build housing from ground up. We've helped customers refurb a lot of commercial conversions at the moment because of the market the way it is. The more quirky it is, you know, the more interested we are, and then can really help out.
Okay,
our customers.
So literally anything from first-time property investor, all the way to £50 million ground up residential development.
Exactly.
Okay, wow. So you can certainly help a lot of different people.
Absolutely.
Today we're going to be talking mostly around bridging finance, BRR, that kind of stuff. That's very popular at the moment.
Yeah.
So basically, we've got a couple of questions that people have emailed in previously to this interview. So the first thing to run through basically is how much money do you think people need to get started with BRR?
Okay. Obviously it depends on the size of the project that you're going to be looking at. With BRR, you can jump in the deep end and go completely heavy. Yeah. My recommendation is understand your skill set and work with a power team that obviously ticks the other skill sets that you haven't got, and probably work your way up. So what do I mean by that? Purchase a property that just needs a light to medium refurb, nothing too crazy, no extensions out the back. You know, a rundown property that needs a lick of paint, new flooring throughout, anything that you can be a bit more hands-on with. And one of the key parts of that is building up that CV. You know, you're approaching lenders that are, relying heavily on you delivering what you can say, and at the end of the day, if you're going into a project that you've never done before and you knock down a wall and suddenly the house falls down, their security goes from whatever value it is to nothing. So they're taking a lot of risk. So there are definitely deals out there that you can do with little to no money in at all, but what I would suggest is for the first few, definitely have a pot of funds behind you. Yeah. The way I sort of talk to customers is work on having a deposit that you would do for a normal single let. Yeah. Therefore, you've got some cash flow available, backup funds if things go wrong. You probably know as well as anyone that refurbs, they never always go to the plan. You can have an Excel sheet that gives you a full breakdown of what you want to do, and then suddenly you take the skirting board off and find an absolute nightmare behind there or whatever. So always have that backup and safety net behind you. So work on a deposit as if you were just buying a normal single let. And then if you've got that extra, we can structure it where you don't even need to use all those funds. And
that tends to be about 25%, isn't it? Yeah, that's kind of accepted at the moment, and that the minimum deposit you really need. Yeah. Some products you can go kind of 85%. Is that right?
Yeah, 85% is definitely dropped off since COVID. I hate saying that word; it seems to be out of fashion. But 85% has definitely dropped off. But there are more now doing 80%. That's definitely come back into play. But I would definitely say work on 25% because. Even if you found a below market value deal that needs less deposit, it's nice to have that safety net. Yeah. The last thing you want to be doing is thinking, I can't even finish the refurb because I'm really stretched here. So.
Yeah, absolutely. Having too much cash is never really a problem, but not having enough is probably one of the biggest problems you can come across.
Absolutely. So
just touching on that 80-85%, kind of how competitive are those? Because typically, I've seen before, 85%, you do pay quite a lot more on the rate, don't you? Is that now becoming more competitive?
Yeah, absolutely. Yeah, so I'll talk about lenders as well. So Shawbrook have got a real nice 85% bridging product at the moment, which is designed for light and medium refurb.
Yeah.
So they'll just give you 85% of the purchase price day one.
Yeah.
No worrying about monitoring surveyors or anything visiting the site. They'll just give you 85%, and then it just frees up less deposit, more towards the refurb.
Yeah.
Lendinvest have also just launched an 85% product as well. And then you can even look at the below market value type deals. So the high street lenders, like Lendinvest, they're not high street, but they are high street in terms of the bridging market. They've now launched that they'll do 75% of market value rather than 75% of purchase price.
Yeah.
They do cap it at 90% of purchase price. So as long as it's within those categories, you're only looking at a 10% deposit.
Okay.
For your first property, refurb it and then refinance it at 80% loan to value if you want. And most of the time, you're pulling out most of your money, if not all of it.
Yeah, it certainly can be really good. Small amounts of money involved. People often say bridging is expensive. Would you agree with this? What kind of costs can people expect to come across?
Bridging has definitely changed massively in the last 3 years. If you'd approached bridging 3 years ago, it was high net worth people lending money on a short term for refurb projects.
Yeah.
And it used to cost, anywhere from 1% to 1.5% a month. You would not get, much less than that. Nowadays, you're looking at rates are from 0.45% per month. So, it's expensive compared to a mortgage, but you've got to look at it as in a means to an end. You're only borrowing this money for 2, 3, 4 months, whatever you need to do the refurb, and you've got to view it at you're adding value to the property, and then when you come to refinance, that money's being pulled back out anyway. So. It can be expensive, but if you structure the deal correctly and know that you're only doing it for 2 months, 3 months, it's not expensive at all. It's when people start, they're thinking, okay, it's 0.6 a month, for example, and they're working it out over 12 months, and you're like, well, you don't need it for 12 months. The way we structure it is, if a refurb's going to take 3 months to do, in 2 months' time you approach us, we've already started the mortgage application.
Yeah.
So the second your property is done and ready to be valued, the value is on your doorstep.
Yeah.
And then everything else behind the scenes, underwritten, is all done. So the second the valuation reports back into the lender, the mortgage offer's agreed. So there's no waiting around.
Yeah, it's all kind of done in advance as far as possible.
Yeah. And that's where bridging cannot, the cost can be reduced because you're not waiting around, wasting time. You're only using the bridging finance for when it's absolutely needed. And that's the key part. When people are, doing refurbs that are taking 3 months, and then the broker starts working, and you're already 4 or 5 months down the line, that's when it becomes expensive. If you've got a broker that's doing either bridge to let, where the exit's already underwritten anyway, or a bridging product, and then with another lender, but the broker's already started the ball rolling, it can be really fluid.
Yeah. So bridging, it can be expensive, but as long as you've got the right person working with you, somebody like yourselves.
Yeah.
That's basically doing everything. They're being proactive. You're getting all the applications in way ahead of deadline. Yeah. That's going to help you bring the cost down.
Absolutely. Yeah.
So why pay 4 or 5 a month when you could just get a mortgage and do a refurb on that?
Yeah. Well, if the problem with that is if you read into the terms and conditions of a mortgage, you'll see that it specifically does state that there'll be no changes to the property at point of offer and at point of valuation. So. There are points. So if you were to say take a 2-year fixed mortgage and all you're doing is lick of paint, maybe a fresh carpet, the lenders are not going to be bothered with that. If you're starting to do some serious, works, new kitchen, new bathroom, really adding value, then it can be an issue. So we are seeing a lot at the moment where people are using no ERC mortgages and then refinancing in 3-4 months' time. 1 or 2 you might get away with, but they are certainly cracking down on it at the moment. I've seen clients blacklisted and not being able to get funding now.
So completely blacklisted.
Yeah, blacklisted. Yeah.
Most mortgage lenders won't touch them at all.
No one will touch them because they all talk to each other.
Yeah.
They all talk to each other. At the end of the day, you've got 9 times out of 10, you've got Connells visiting the property to value it. At first, you're probably going to have the same person come out to your property in 3 months' time. Anyone with any common sense has gone, hold on a second, I was here 2 months ago and that wall wasn't there and that kitchen was different and they will snitch on you. There's no other way of putting it. They will do it because it's not worth their heads on the line as well.
Yeah.
definitely be careful.
That's definitely something we need to watch out for, because a lot of people, even just kind of looking training courses, things like that, a lot of people do promote using that kind of strategy.
Yeah.
It's low cost, you can get started, but
Yeah.
the downsides seem to be significant.
Yes,
Blacklisted,
massively.
can't get finance.
Yeah, it's one of those. It's anything. I'm not saying it's illegal. Well, it is illegal because you're breaking in terms and conditions. But the word illegal is a bit extreme. But it's like I always compare it to cars and driving. Your car will allow you to go 90 miles an hour.
Yeah.
Doesn't mean you can.
Yeah.
So the mortgage, you can technically go behind the scenes and do all this, but doesn't mean it's right.
It's okay speed as long as you don't get caught.
Exactly, exactly. And people are getting caught now.
Yeah.
It was the same when Airbnb was around. Well, still obviously around, but lots of people were using buy-to-let mortgages on service accommodation.
Yeah.
And then I think Airbnb, specifically in London, actually created a list of all the properties and then gave them to the lenders.
Yeah.
And said, these guys are running Airbnbs on your property. So with compliance the way it is, it's everything's getting squeaky.
It's just not worth the risk at all, really, is it?
And we've spoken about it. If your deal's not good enough to cope with bridging or whatever, then it's probably not the right deal.
Yeah.
There are other deals out there.
How about doing a flip on a mortgage? Same sort of thing?
Again, yeah, I mean, there are products with ERCs, there are products with no ERCs that are designed, for set purposes, which flipping isn't one of those purposes that it's designed for.
Yeah.
And one or two you probably get away with, but the more and more you're doing it, lenders are going, okay, Joe Bloggs has applied for 3 mortgages and they've all been redeemed within 2 months. Hold on a second, let's have a look at what Joe Bloggs is doing here.
Yeah.
And they will look into it, because they've got compliance that they have to follow, and if they're seen to be lending up for that purpose as well, they're going to get in trouble. So it is definitely being caught out.
Yeah, it's just not worth it. I suppose property investors, isn't it? The people that are, speaking from an accountancy point of view, the people that do the best are the people that treat you like a business.
Absolutely.
And if you're just starting out in property, it's not worth basically putting at risk your future business just to save a couple of £1,000 here and there.
Yeah.
When you look at what you stand to actually make over the rest of your property business career, so it makes sense.
Absolutely.
Structure it right from day one and use the right finance.
Yeah, and with property, as you know, one of the biggest drawing points is capital appreciation of the property anyway. So over time, if you see it as an investment and it appreciates in value, it eats up away at that at that deficit that you're losing on bridging anyway. So it's best to do any business is best to do the right way.
Yeah, absolutely agree with that. So talk about refurb costs as well. So you mentioned about how you can basically get finance to actually buy the property.
Yeah.
Now we need to do the refurb. We're using the right products here, using bridging or investors' cash, whatnot.
Yeah.
Can we get any money to do the works?
Yes. So, light to medium refurb, as I touched on, there are 85% products now available. Yeah. When it comes to light and medium refurbs at 10, 15k, it doesn't always make it worthwhile borrowing that money to do the refurb, because it's just too small. Where it comes into play is when you're doing some serious refurb, 25, 30k refurbs, where actually you need that added cash flow to help do the project. So how a lot of lenders structure it, they'll still give you 75% day one towards the purchase, and then they'll lend you 100% of the build cost.
Okay.
So again, you can still come into that sector with just 25% deposit. Just frees up a lot more the funds towards the build. You're not worrying about having to find that yourself. But the problem with that is a lot of the times they'll do it on invoices if it's just a small refurb. Yeah. But sometimes they want surveyors to come out and actually say, right, okay, you've done 10 grand's worth of work. Let me just check. I've gone around the property. Yeah, I can confirm they've done 10 grand's worth of work. Yeah. Let's release the next lot. But a surveyor visit probably costing about £1,000 each time. So which is why when you're doing 10, 15k refurb, it eats into it way too much.
Really, is it?
So you need to be looking at these bigger refurbs.
And even with the invoices, that's paid in arrears, so you need that cash up front regardless.
Correct. Yes. Yeah. So, as you say, paid in arrears. So you do 15 grand's worth of work. You then have the invoices from the builders. Go back to the lender and say, here's 15 grand's worth of invoices, and then release the next 15 to do the next stage. Yeah. So it's on these small, like I said, carpets, kitchen. It's probably not worth it. But if you're looking to convert a house to say a 6-bed HMO, where the costs are a lot higher, that's when it comes into play. Yeah. Absolutely. Okay. So it's all been really useful so far, guys. Hope you've got pens and paper, making notes of all of this stuff. We're going to end the video on probably the most common topic, so 100% finance. Yes. How do we get it? This is the big one. For everyone that stayed right to the end to watch this, you're going to get the best information.
100% finance.
Yeah.
What do people need to know? So how can they get it?
Two ways of doing it, really. One is finding a deal that's below market value.
Yeah.
Secondly is having perhaps other assets available to you that aren't cash. So let's look at BNV first. As I've touched on before, there are funders that will lend on 75% of the market value rather than the purchase price. There are bridges now that are actually, really pushing the boundaries up to 90-95% of the purchase price. So you're putting little to no money into these sort of deals, okay? As long as it stacks within the 75% of market value. Those deals are obviously few and far behind, to find, but there are. I've done them, so they are available to find. So that's one of the primary examples. The second one is we have a lot of clients that maybe have a portfolio that's probably only geared to 60-65%.
Yeah.
And there's 10-15% available in those properties that aren't being used.
Yeah.
Because they might be on a mortgage that's going to have early repayment charges. They just fixed it on a lower loan to value. There's a pot of cash there that they didn't even realise they had.
Yeah.
So you can have second charges against those properties. Again, multiple properties. You might think, oh, there's only 5-10% in this one or 5% in this one. You can put them all into a pot, and the bridging lenders will lend against that available equity.
Yeah.
Which will soon then cover the deficit that you've got on this new purchase.
Yeah.
So they're the two most popular ways of getting 100% finance. So if you've got portfolios out there that you might even think they're geared to the maximum, but 5 years ago at 75%. It might even only be 70% now because the market's on capital appreciation over the 5 years. You've got equity in there that you didn't even know you had. That's best to access without paying any early repayment charges.
Yeah, so fantastic. That's two ways on how to get 100% finance.
Yeah.
Incredibly valuable stuff. So, how can people contact you for more information? Want to use your services?
Yeah, so on all social media platforms, Facebook is Engage Finance, Instagram Nick Dutton. LinkedIn, and then email nick.dutton@engagefinance.co.uk. The website is engagefinance.co.uk. We've got videos on there. We've also got a YouTube channel, again under Engage Finance, where we've covered development finance, buy-to-let mortgages, we've covered a bit of bridging, we've covered a little bit how to structure from a mortgage point of view. I know Josh covers SIC codes, things like that.
Yeah.
Key areas that you need to be thinking about before you venture into property and the property business, and how to get funding from those. So all sorts of platforms you can find us on.
Amazing. Thank you very much for coming on the channel today.
Thanks for the
Really
invite.
appreciate it, Nick. Absolutely dropping huge knowledge bombs there. It's certainly going to help a lot of people get the finance they need, which is going to help them grow a bigger and more profitable property business. It's been an absolute pleasure. Thank you very much.
Thank you.
Bye for now, guys.
Cheers. Bye.